Let's get the party started. All right, so good afternoon or good morning, wherever you find yourself today, and welcome to the Mastering Compliance, Efficiency, and Successful Adoption with Consumer Permission Platforms. My name is Danielle Jackson, and I'll be facilitating today's session. Just a couple of things that we want to note about the Zoom webinar platform. We do have an opportunity for you to ask questions of our panelists today. There is a Q&A function located at the bottom of the screen. You may have to wiggle your mouse just a little bit for the black bar to appear. You can click on the Q&A icon and you can enter in your questions at any time during the presentation. We'll be monitoring the Q&A section to see if we can answer questions as we go along. If not, then we'll definitely try our best to get to it at the end of the presentation. So please keep that in mind. You don't have to wait until the end. You can use that functionality right now if you have any questions. Once the webinar has concluded, I will provide a link to today's recording for your convenience. And also at the end of the presentation, we will have a short survey. So please make sure you provide your honest feedback on what you thought of today's session, as it helps us to improve our future webinar offerings. Now I'd like to introduce our moderator for today. We have our very own Rick Hill, the Vice President of Technology here at Mortgage Bankers Association. Rick, the floor is all yours, and thank you all for joining us on today.
Thanks, Danielle, and welcome everyone for being here today. I do encourage you to please, if you have questions or comments, please do go ahead and put them in the Q&A. We'll try to answer them as best we can throughout the session. But welcome. We are going to talk a bit about this concept of consumer permission platforms. Our goal really first, for those who might not know about it, we're going to explain, what is it we're actually talking about here, and then we'll jump into the what are the benefits, the risks of it, and then spend a bit of time also in one of the risks, which is really how do you deploy something like this so that you get effective adoption across your organization, across your consumers. As we get started here, I do want to introduce others. You all can see me here. I'm going to go forward here. So Jody Hall. Jody is the founder of Adanda Road Consulting. She has spent a number of years in our industry, including being the chief operating officer in the lending side of the world. So she's been one of those individuals who's actually implemented this type of technology. So we're very fortunate to have Jody with us. The same thing with Susie. So Susie joins us from Streamline Operations Solutions, where she is a consultant and the founder there. She also has been a COO in the mortgage side. So we're going to have some really good experience here with a couple of folks who've been on the lending side who have seen what it actually takes to try to do this, and can hopefully talk about some of the things that you're going to encounter, or you maybe are encountering and haven't figured out how to sort of move the ball forward. So joining those two is Richard Grieser. Richard is with Truve, and he's going to actually, as part of his role today, certainly talk about what it means to implement all of this, but also give us a quick demo. I increasingly believe that demos of concepts are critical to understanding it, and so we're going to take a few minutes in that space to do a quick demo. So, oops, I jumped forward a little bit too fast here. So sorry, we're going to jump back here before I do that. So if I could, I do want to talk a little bit. Maybe I'll start with you, Susie. Income, assets, employment, these terms, right? Things I know I've had to fill out, right? I know the sort of the stack of papers that I have from my purchase or refis or whatever. What is this? What we're talking about here? Is that the sort of the framework of what we're talking about automating?
Exactly, exactly. As you go through, anybody that's gone through mortgage, it tends to be very painful, and you have to go dig up your W-2s, you have to go dig up your pay stubs, you have to print them, you have to scan them, you have to upload them. all your bank statements, making sure that you have all the pages, and because nothing is more irritating to a consumer when they thought they've uploaded all the pages of their bank statement and they get back, oh no, you didn't do page 10 and 13, which by the way are blank, but you still have to have them. So this is automating that function and getting that data electronically through one of these vendors and not having to do that. And I will tell you, I've done it personally myself as a consumer and loved it. It was fantastic. So that's exactly what this is about, is automating that function and helping the consumer understand how this is a much better option. Jody, anything you want to add to that?
No, I think that it is the technical aspect of consumer-enabled solutions in the manufacturing process of mortgages. And when you think about it, Susie and I know we have over 50 years of combined operator experience. We'll leave it at that it's plus 50. We don't want to age ourselves too much. But what I will say is, we need to think of this differently. So I have taken a paper 1003. I have taken a paper application and had the closing package typed on the carbon paper, have the 1003 typed on the carbon paper for the closing package. But all along, we were getting borrower-enabled solutions. It was just in the aspect that they were giving us physical documentation. So this is just the technology that is offering a streamlined process for them. And I feel as though if anyone has ever taken a paper application and they fast forward to the times that we are in now, they've been doing this throughout other aspects in their life, whether it's you're going to a MyChart for your medical information, where you're providing information so that they can get your insurance provider and insurance claims. You do the same thing. You buy a life insurance policy, you give permission to know your entire medical history. So I don't think that it is, if we put it in the context of things that we have already done, it's just the different way of being able to provide data. If we can show people that, you're doing this in your everyday life. No one has a problem putting their credit card number into Amazon to get their packages, or to load all their information into PayPal to receive or to send payment. So it's just a matter of context, and we've been doing consumer permission solutions. We've just been doing them differently for many years.
It sounds like, so like I have a 401k. I was going to say who it was with. I'll try to not do that. But I can link my bank information, which is a different financial entity. I can actually link a different my current employer's 401 to it, so they can all sort of combine stuff. Is some of that some similar things, at least behind the hood? Maybe Richard, is that kind of beneath the hood? Is that some related kind of concepts?
Sure. I think most people who just as a consumer have experienced this stuff is linking bank accounts, right? People have been using Mint for a very long time, services like Mint, to kind of aggregate all of their different financial data and get a snapshot of where their personal finance is looking into improve those trends for their lives. Yeah, 100%. I do want to say that I think we're just really blessed to have Jody and Susie on this, because they are very seasoned operators at very large lenders. And so they are going to really be able to talk about this from the operations side. And I'm just really happy that they're here. My 2 cents on what we're talking about when we talk about consumer permission platforms, I think we're talking about giving the consumer back control of their data. That's really what we're talking about, right? Historically, when we as an industry have, especially when it comes to verifications, when we have worked, with the incumbent and some of the big providers out there, when the verification process comes into play, the consumer has no idea what's going on. Their data is being, traded and sold in the background. And this is a fundamental break from that, where the consumer actually sold back to them. And so the consumer is actually explicitly giving permission for a third party to provide this data, for their mortgage application. It's a break in the process, a very different way of doing things.
Can you clarify, Richard, the couple of terms? Because I I think I first got exposed to this several years ago, but I want to make sure. So, back then there was this term called data aggregation. And then a couple years ago, I was hearing automated validations. Are the concepts the same? Are those just different words for what we're talking about here?
I would say the word automated is really a method of implementation. Like, for example, when someone's implementing Truve, you could have it manually done through your Encompass, or you could actually, if that's your LOS, or you could have it automated through your POS, like embedded in your POS, and it's automated. One is like a push button. Literally, the loan officer or processor is pushing a button to have that sent to the borrower. And the other is that it's completely automated. The borrower is filling out an application and it's embedded as part of the application. So the automated word is really just a method of implementation. What I'd say is that there are different words for consumer permission platform, like open finance platform, but it all kind of means the same thing.
Excellent. We're talking consumer permission here. Richard, maybe you start with that, and then Susie or Jody, if you want to add in, what does that consumer permission mean?
Well, it's the consumer expressly giving consent for a third party to go and get their personal information for the use case that, like, for example, for a mortgage application. That is explicitly what it means. The consumer is giving their consent to a third party to go and get their personal information and use it. Just in layman's terms.
Susie, maybe you want to say something, or Jody?
I was going to, Jody, I loved your example, and I think that was spot on. I mean, we give these permissions all the time. We give, and I hadn't even thought of the association with medical. I do all mine, I can look at all my medical records online, and we give these permissions all the time. And so it is giving that permission to that lender through their vendor to get that data directly. And again, really making that process streamlined. So, that we don't do anything without the consumer's consent. And so working with them, that link gets sent to them, they go in and they authorize the process, and then the vendor takes it from there, goes out to, either the employer, the payroll provider, or the bank, and get that information and bring it in.
And I really do think it is just a change in process. We have been getting authorization to pull credit from the consumer for many, many years. I can't remember when we started at the very beginning, the first contact with the consumer, getting their authorizations to contact third parties. So it was permission then. It was the way in which it was permission. The borrower signs a consent form very early in the manufacturing process, usually right after having their credit pulled, which is sometimes a verbal acceptance to have credit pulled and to access that information. Sometimes it's embedded within the POS. Some people require, some lenders from, it's a risk and they'll get a paper document signed for authorization to pull credit. But then there's a borrower's authorization that gives the lender the opportunity or the permission to go out to third parties. And if you're doing a manual verification of employment, you're using that authorization to go to a employer and say, I need this borrower's information. So again, I like, Rick, your comment based on automation. This is just the same process we've always been doing that we need to do in order to create a compliant, saleable loan product. We're just performing it in a different manner.
Can I ask, there's a question that's come in, and I think is appropriate here. Is there any standard, the question is, there's standard verbiage, right, for getting this consent? Is there everybody uses the same words to get it, or does it vary from lender to lender or product to product?
I would say that it varies from product to product and what the third party allows. Most third parties that I have seen for, I'm talking like a Truve or a Finicity, you have the ability to almost white label the request so that it looks like it's coming from the lender. There is fairly standard language in that you are reaching out to get the assets, And there is some privacy information that is displayed to the consumer that's consistent. And we're going to talk about adoption in a little bit, and we'll hit on that there. But you also have the ability to, with a lot of platforms, to be able to configure it so that it's in your language, the way in which you speak to your consumers. Is it formal or is it more playful? And you really can put your own spin on the way in which the consumer is asked to engage with the technology. And we'll hit on that with the adoption, but it's very important to do that and also appear as if it's coming from the lender. You'll have greater adoption than if it just says, hey, Truve needs to verify your assets. And you're like, well, wait, I was applying with ABC Mortgage. Why is Truve trying to do this? So we can hit on that within the adoption piece. But I would say that the verbiage is fairly standard, but configurable or customizable.
I know when on the tax transcript side of the world, when the Taxpayer First Act came out in 2019, MISMO looked at that. You're right. We needed to gain consent to pull the data, but also to share and what the purpose was. So MISMO actually created quote unquote standard language that I think most lenders, I believe, still use that standard, but it's a standard. So what that means is there's a starting point, and then there's a customization part of it. I think, Jody, exactly what you said, and which I think is very appropriate, because you may want to show different things. The key is getting the consent, and that the consumer understands what they're giving consent for. The rest of it, may be wrapped within the way you do something, right? So what I'm going to do, I'm going to come back to a couple of these other questions a little bit later, but I do want to move forward here to a demo here that I mentioned a little bit earlier. And let's see, Danielle, I don't know if you're, I'm going to give control here to Richard so he can bring up this demo.
Sure, I'll give a quick demo if everybody's interested. Let me give me a moment.
Yeah, and while he's doing that, the goal of the demo again is we just used a lot of words. We want to show. I just increasingly realize showing is how I understand. I've seen this with remote notary and other things. It was one thing to hear people talking about it, but it's wholly different to see somebody when they show it. So I know Richard's bringing that up. Don't see it yet, but we will go to that, and I will keep stalling while that. Oh, here it comes. Okay, so Richard, you take it away.
Sorry, I had to log into our demo environment. So everybody, Truve provides verification of income, employment, assets, and insurance. Most lenders are interested in income and employment. And so that's what I'm going to show you right now. So what you're seeing is the emulator. It's a sandbox environment that shows what this looks like to the borrower when they're logging in on their phone, right? Because most people are on their mobile phones these days anyway. So that's why we've designed this. But if you want to, you can just imagine this is embedded into your POS, because a lot of our lenders do that, right? Whatever your POS is, the borrower can go right through this experience in their POS. Along the top here, you can see the borrower sees like popular payroll providers. They can look up by employer, their payroll provider. And if they're a gig worker, they can go through that. You have DoorDash and those kind of things. And then there's others also. You can get into government and all of that. So for this example, I'm just going to select the first one. Let's say I work at Facebook. And so Facebook is Meta, in case you don't know. Click on that. And, we've linked and mapped them to their, via Workplace, to their payroll provider. And so the borrower, this is the borrower portion of what you're seeing for the demo. I mean, the borrower puts their, their work email and their password, just like, let's say it's ADP, it doesn't matter who your payroll provider is. We've mapped 95% of the US workforce to their payroll provider. And so borrower logs in just like they always do, hit sign in, and their portion is largely done, right? I mean, that's all that they do. And, you hit done here, and on the back end, this is what the lender's actually seeing. On the back end, the lender is pulling this into their LOS or POS. It just gives give me just a second. It'll appear here on the screen. You're going to get their at the top here, you're going to get their identity information, your first name, last name, social security number, all the stuff you're used to getting, and in the same file format. We've done that explicitly, that lenders are used to getting this in. And then below that, you'll get employer information. And then finally, you'll get to the important stuff, which is, pay stubs and W-2s. And all of that is, goes directly into your LOS and POS. I think the final portion that I'll just take a moment to touch on for everybody is that, GSE reps and warrants are really important to a lot of folks. And we were approved by Freddie Mac in December last year, and we were conditionally approved by Fannie Mae and working towards the full approval. It's pretty much imminent. So we've been conditionally approved with Fannie. And so they've been fantastic partners with us. At the end of the day, why are lenders really interested in Truve? It's and providers like that is because the rising cost of credit and verifications have been really affecting them, especially in this environment where there's lower volumes. And so lenders are desperately looking a way to save on those costs. And Truve typically saves about 60 to 80% on verifications over the incumbent and solutions like that. So at the end of the day, that's Truve in a nutshell for you. And if you'd like to see, I just say to anybody here, if you're listening and you want to see what it looks like in your own POS and LOS, you can reach out to us and we'll give you a personalized overview.
Richard, I was going to say before, can you bring your screen back up there? Hopefully you still got it.
I did.
There was a question, and I thought it would be good while this is here. Maybe you could scroll up a little bit more. But there was one of the questions is, is the consumer going to see this? And I guess maybe I would say maybe they don't see it the way this exactly looks. But maybe you can talk, Richard, about what they maybe can see. And then Jody and Susie, what might you show the consumer of all this? This is a little too data oriented perhaps for most consumers, but maybe Richard start and then the two of you weigh in.
Yeah, we're not showing this part to the consumer. The consumer logs in, and those W-2s and pay stubs are pulled and sent to the lender in a JSON package. If the lender wanted to do some type of configuration or some type of, if that was their preference, for sure we could support that. But typically that's not necessary. I think one of the things I actually failed to comment and note which is really important, is that we can do re-verifications. Truve does re-verifications free of charge, right? So typically, the average person does a verification at application, and then 10 days before close, it's like about $110 roughly, in that realm with the incumbent, and we're saving about 80% on that cost because we don't charge for re-verifications. You can do it as many times as you want, 5 times typically, leading up until close. But I'll let Jody and Susie answer that question about the borrower facing. It's an interesting question.
No. So the answer from my perspective is we have never shown the customer what we receive. What we have explained and had our loan officers explain to their customers, or a processor explain to the customer, the data that we're getting is the same as if we got a paycheck stub from them or a W-2 from them. It comes in that same data comes in, and it comes in a format that looks just like their pay stub or their W-2. So we explain to them what we're getting, and that makes them feel comfortable. We're not getting any more information. We're not getting their entire HR file, which I've actually had a customer ask me that. We're getting exactly what we would get, the same data that we would get. We're just getting it electronically versus them uploading their W-2 or pay stub.
And my only thing to add to that is that if I'm a consumer, as long as you aren't presenting me another task or condition to fulfill, it isn't necessary. So did you get what you needed? And do I qualify? Because they will get it back in the form on their IRLA as what the income calculation that is being used will print back in the form of the IRLA. But I don't, and I do think, you know, if you wanted to Richard's point, you could write it back in the point of sale so that they could see documents that they previously uploaded if it became a point of contention that was worth doing that. I actually am going to put Richard on the spot though, because another question came up. What is the cost per person on a VOE verification for writing each application?
The cost per person, like the cost
What's
per.
the cost per VOE per person?
Well, it depends on your loan volume, right? It depends on, because we give price breaks typically based on loan volume, but we also have a single broker solution. So if you're a single broker, you can do one-off verifications on the website. That's kind of the starting point. And then the more volume you do, typically the price comes down. What I'd say is just reach out to our team if you want a quote on kind of, you know, for your business. I think I have an anecdote I'll just share for everybody. My best friend since I was 4 years old called me up the other day and he says, "Hey man, I think I just used Truth." And I was like, "What do you mean?" And he just bought his second home and one of our biggest clients did his verification. And he was like, "Dude, it was super easy. It took me 2 seconds. I verified." And then he was like, "Your technology is awesome. It's super slick." That was one of the most personally validating moments in my career when one of my best friend from when I was 4 years old called me up and said he just did that. It was pretty cool.
My personal anecdote to that, because I was involved in that Mismo thing to get consent several years ago, I then refied a loan within a year. And I took the piece of paper out and I'm like, honey, look, my company is on the bottom of this form.
So cool.
So sorry, folks, for ad-libbing a little bit there, but it is fun sometimes to see things you work for actually being utilized, right? And hopefully solving problems. And so what I will
Rick,
do,
just to answer, Rick,
go
can
ahead.
we answer like from, I'll give a more lender operator answer to the cost question. Richard gave a very sales answer to the conversation. I would say in general, if you're looking at the big one, you're running it around 50 to, I've heard as high as $65 per verification per borrower. So if it's written, say you pay $55 for the initial written verification of employment, and then you go on and do the verbal verification of employment 10 days before close, it's double. So the happy path is that per borrower, you're only verifying 2, but there aren't many happy paths in the market today where we have to verify previous employment, where it adds additional cost. And we also aren't very good about timing up that 10 days before closing. Something goes wrong and we've verified it too far before the 10 days. So then you add another $55. For the solutions that I have seen generally, I would say that they are running a cost that is 60% to a half of what one cost, and then you get the ability to run additional verifications without additional cost. So there is a significant amount. And also when we think about cost, and I was going to talk about this later, but I think it fits in here as well. For verifications of assets, which we have up on the screen, the agencies have programs where you can use your assets for certain income types, that if you have 2 months worth of assets from a consumer permission platform that is acceptable by the agencies, you can use that in place of your written verification, your verbal verification of employment. So you can see even you have to get in purchase transactions, we're verifying the assets already. So if we can use the same verification of asset for the verification of employment and income, then there is significant additional cost savings in the process.
Thank you.
I'll just say that's a really good answer, Jody. Thank you. I can't be trusted with sharp objects, as my wife will attest to. So I'm glad you're here. I will just take this moment for a quick plug. Jody and Susie are fantastic operators. Feel free to reach out to them if you need any help with operations at any time. They're accessible from LinkedIn. I have to do that. They're just amazing.
Thank you, Rick.
Oh, was somebody going to say something?
Thank you.
So we do want to ask you all who are attending. So we're gonna switch to a poll question here. Danielle will bring it up here in a second. But you know, it's very simple. Are you using one of these types of things today? Yes or no? A very simple answer. And so that this doesn't get rigged in any way, none of those of us speaking today are going to be answering this. So this is just those who are on the meeting. So if you would take a second, and Danielle, as soon as you feel that most people have had a chance to answer, feel free to share.
Rick, I'll add one thing. I was just at a conference in a session when they were talking about explicitly this consumer permission platforms. And I was called on because I was wearing this Truth vest and they were asking about Truth. And I just asked the audience, there's probably 20 lenders in the audience. And I said, how many of you are going to use a consumer permission platform this year? Like, how many of you feel like this is something you have to do? And 100% of the people in the room actually said yes, whether it's true for somebody else, but 100% said yes. So I thought that was pretty powerful.
Richard and I happened to be standing beside of each other as well.
All right, Danielle, are we good? Oh, here, ready to share? All right. So, about 50-50. Okay. So this is folks who are using it, right? So, to your comment, Richard and Jody, you know, it looks like perhaps more people are moving towards it, right? If only 50% are using it, right, then that means 50% aren't. We actually do a survey at MBA every year, and we've been looking at this technology now for, I think it's about 5 years on this technology. And, you know, the early sort of adoption was lower, but in the last year, I will say the results aren't out yet, but we definitely have seen increased adoption in the last, let's just say, 18 months. So I think it goes to the point. Richard, Jody, any thoughts on the results there of that poll?
I'm actually pleased to see that it's 50-50 because to your point, it's gone up recently and I think people are feeling more comfortable with it. So I'm actually pleased to see that it's 50-50. It'd be nice if we could get it up much higher than that, but you know, it's nice to see that we're moving forward.
Yeah, that from my perspective, that's 50% of the folks that have a really good opportunity, right, to save a ton of money for their company and also to get more accurate data. Like there's a lot of benefits that we're going to get into in just a moment.
Well, perfect segue, Richard. So you know, we want to talk about benefits as well as the risk. You can see some of it up here. But Jody, if I could start with you, you know, you did this, right? You did it for a reason. Did you get what you were looking for? Were you surprised by anything? Sort of what were the real benefits to your experience there?
I think I think that the benefits that we have listed are what you would anticipate. The one I would like to put an exclamation point on is the more committed borrower. So we have found that the sooner a borrower starts providing meaningful information other than an inquiry to say, hey, I'm looking to purchase a home, the sooner that they start providing more meaningful data where they feel like they're making the clicks and they're committing to a process, then the greater pull through that we have and the stickier the consumer becomes. So the advantage of doing the consumer enabled permission approvals early in the process is making them more sticky and getting them committed to you. So we did see less shopping in the process for the consumers who were willing to go there. We talked about the lower cost for the borrower. The other benefit that is also not listed is consumers hate to be asked for things that are not needed. And what they hate more than being asked for things that are not needed is to being re-asked for something that they already provided. So by using the consumer permission solutions, you're not going back to the consumer to say, I ask you for 1 year of W-2, now I need 2. You have 2 years of W-2, you choose which ones you use. Or you, on your bank statements, Susie used the example, the last page of the bank statements that says intentionally left blank, but the investors require, if it says 10 of 10, or if it says 9 of 10 and there's no 10 of 10, then they're going to condition for that. And it's uber frustrating for the consumer. The other thing that we get out of the verifications of asset is proof of deposits being made for purchase transactions. So the escrow deposits are made. So we don't have to go back to the consumer and say, oh, will you provide me another updated bank statement so that I can show that those funds legitimately were pushed over to the escrow agent. So you have to ask the consumer for less, and you shouldn't have to ask the consumer for things that they already provided. You would just be going back to the solution to download additional information or re-verify additional information if needed in the process.
Yeah, and I'm going to jump in here real fast because one of the benefits that I don't see here is and we talk about a little here, higher quality data, but you have less chance for fraud. And that is huge to your investors. That's huge for the industry. It's huge for the company. And with that data coming directly from the source, you don't have to worry about, was a pay stub altered, was a W-2 altered, was a bank statement altered, etc. So, you know, all of these are the right benefits, but you also have that added benefit. You have the underwriter's ability to look at most of these vendors highlight like larger deposit. So you kind of have a job aid going through these documents if there's any anomalies. So I think, you know, these benefits along with the lack of or not getting fraud or not having the potential for fraud is really one of the biggest benefits, in my opinion.
And rep and warrant relief, talk about the ultimate risk reduction. And I believe that the entire industry, it feels like, and if you're not on this bandwagon, you might want to get on it. But I feel as though everything is being pushed further forward in the process, where the borrower is handling more of the transaction and controlling, as Richard said, you know, controlling their data, controlling their information. So if we can push these types of solutions forward where those validations are done early in the process so that I know that my income that I provided has rep and warrant relief and the income is calculated, then that loan, I know how much home I can purchase before I go look for a home. If I verified my assets, we know what the amount that the consumer can afford to buy before they go shop for a home. So we need to push more and more forward in the process, take it out of what we've wanted to have control of in the past, just so that we get the information further forward. And we know with a greater degree of certainty could even potentially be minutes of applying for a loan application, that the consumer knows what they can qualify for, and that sticks all the way through the delivery of that loan to the agencies or to the investors.
You know, Jody, you're spot on. That is probably the biggest benefit. Think about the loan officer has all this information up front, has true information that they can talk to their borrower about what is the best product, what they can qualify, and not having to go through the entire loan, go all the way to the underwriter and then get turned down, right? Or counter offered, et cetera, is huge from a sales standpoint. And, when we talk about later how to get, people to adopt this, that to me, that's one of the biggest selling points.
Yeah, I'm a data person by training, and it's something I hadn't thought of here before. You know how we get the paper in or whatever, we either fat finger it into a system or perhaps we use optical character recognition, which is not 100%, right? This is a data file, right? It goes right in, should be able to go right in to your POS, your LOS, however it's interfacing, without the human being able to make a mistake on that. So again, it keeps additive, one less potential problem area on top of another less potential problem area, makes that operational process one heck of a lot more streamlined, it sounds like.
Absolutely.
Yeah, I'll just add that we have clients that, I'll give you one of the biggest banks in the country. I think they're like number 10 in the country. They said that, hey, well, here's what we're seeing. Once someone verifies with Truve, that borrower closes in like 30 days. That borrower has this much less fraud. Like, it's amazing. Like all the different, just how much better it is, how much more committed the borrower is, how much more accurate the data is too, because, we're pulling directly from the payroll provider. If the borrower was laid off, the payroll provider is going to have that data. And so you're going to know in almost real time, whether the borrower is still employed or not.
Excellent. So let's switch to the risk side, and Susie, start with you. But is it perceived risk, real or actual, right, or perceived? Go ahead, Susie, and maybe talk a little bit about some of the risks you have encountered.
I think you're one of the biggest perceived, and it's a perceived risk, is a consumer being worried that somebody will be able to continue to access their account. And, the link goes to them. They put in that information. So it's like going into your own bank account all the time, going into your payroll provider. They're not going to be able to continue to go into it after the loan is closed and steal your information. So that's one of the, and quite honestly, and again, we'll get into how to get people to use this, but one is training your sales team and making sure they understand the risk and the controls so they can assure the consumer. I personally, as Rick was talking about, he used it. I have used this in my own personal purchasing a property. And I will tell you, it was streamless. It was so nice not having to go dig everything up and upload it and being able to get my loan closed. And I did close my loan much faster. The only thing that took a long time, quite honestly, was the appraisal. Other than that, everything was very streamlined. So I think that it is a perceived risk. And, if you make sure that you outline all the benefits of it and the security and the safetyness of it up front, you're going to have a much better adoption with your salespeople, because I think that's where it starts. And I think a lot of companies start this from an operational standpoint because they see it as a savings, right? With operations, so they train operations and they train underwriters how to look at the data. And we don't spend enough time on the sales team and explaining the concept to them. So I think that to overcome the perceived risk, that's how you do it. And, Jody was talking about, or Richard, I don't recall which one, about getting it into the POS. I do think having it up front is better, and integrating it into the POS, and making sure that you have that information much sooner in the transaction to help the consumer.
And I think that we can there's a couple questions, and I think Richard can probably answer this better than the rest of us, but the concern about storing data. So what is the privacy that is there? Because I would say that is a perceived risk, is that, oh, you're storing my logins to my asset accounts or storing my logins to my payroll provider. Can you address that?
Yeah, I mean, you do this all the time with your data whenever you sign into your banking application, right? Like you put your username and your password. You've gone through sometimes you've gone through like um, uh, my mind is blanking on the double verification where you get the text also.
Two-factor authentication.
Thank you, two-factor authentication. You do this stuff all the time, and your data is actually stored encrypted right now. That's usually how almost every one of your technologies works, and we're no different. We use the cutting edge technology to store the borrower's data. It's temporary. We're not keeping this stuff forever. We're just doing it while the person's in application and up until close. So you can do the re-verifications. And it's literally, I saw one comment in there in the questions about whether there was more work on the operations team to do re-verifications once the customer is given consent. And actually, it's way less work. And you just press a button and it re-verifies without the consumer ever knowing. So that's why you're doing this, right? Because you're saving all of the costs of re-verification, and you're keeping the borrower from having to go and dig up all of this paperwork 2 times. I mean, lending is hard enough as it is. That's how I look at it, right? I mean, you're giving your sensitive, sometimes embarrassing personal information to sometimes a stranger, right? Like your loan officer might be a complete stranger. Maybe there's some stuff that you're really embarrassed about. This stuff doesn't have to be hard. Also, is what I would say.
And I do get the pushback from individuals. They don't know, because it is stored, because like their bank account information is stored in their phone. They have no idea what their password is. So you get pushback that they don't know how to log in to their accounts because they have them stored on their devices, which requires them to go look up their password or reset their password so that they can then use it. So that gives there's a drop off from an adoption piece when they don't know the passwords to those accounts.
It's kind of an interesting thing that, right, we've gotten so used to being comfortable that not having to key in our own password on our own phone or whatever, that we've forgotten it, which then we get anxious when we actually have to enter it, which is kind of an interesting conundrum, right? Because you actually want someone to have this security, right? You want some type of access control. But it really is, I think, Jody and Susie, right? That is a limiting factor, right? It's almost like and me personally, I've gone so far advanced to get comfortable with it. When I actually have to step back to put a password in, I get less comfortable.
Yep.
No, Rick, you're right. I mean, as you were talking, I was thinking about, I do facial recognition a lot, so I don't even have to put in a passcode ever, it's facial recognition. And so when I do get aggravated if I have to go look at my go into settings, go to passwords, look at my password, or get a new password. It is uncomfortable now because we're so used to this automation. And so, again, I think it's important to help salespeople guide consumers in that, because I think that that's going to be your front line for adoption into any of these vendors, which I think are critical for our future.
Before jumping forward, one last question for you all. So I've opted in, I've given my consent. I can opt out, right?
Yeah, absolutely.
All right. So as a consumer, I think that's also an important thing, right? Yes, it could cause a problem if I opt out midway through a transaction, but I still trying to go through the transaction, right? Then you've got to revert back to paper or whatever the alternative path is. But the consumer has the option to opt back out after they've given that permission. So I think that's also an important thing for folks to understand. So let me ask, I think we've alluded to this, but maybe real quick in case you all have any other thoughts, but are these platforms, are they almost a necessity these days in the sense of trying to reduce our costs? And why is that, if it's true? And maybe Jody, Susie?
I think they're a necessity. I'm not really sure. I'm not really sure how you conduct business manually if you're, I mean, it's cost over $13,000 to manufacture a loan. And if you want to drive down cost, there aren't other competitors out there that are driving down the cost of what we're having to use for a large percentage of our verifications. So the lack of competition is really driving us through these consumer permission platforms, because that is our only opportunity when it comes to verifications to reduce cost. We can't, it's either that or you figure out how to, cut staff, outsource. So, and how much of that is then passed on to the consumer. So I think it's a necessity. And I think that it is a huge miss on lenders' parts if they're not looking to implement consumer permission platforms immediately.
I would totally agree. It's a necessity from reducing cost, efficiency for your staff in underwriting the loan. What we talked about is having the consumer more informed, the loan officer and the consumer more informed up front. It starts from the beginning and goes all the way to the reps and warrants that you get from the GSEs. It's cost savings all the way through. And, so yes, it is definitely a necessity as we go in the future. Jody's point, it's getting more and more expensive to get a loan and becoming more difficult to get a loan. This will help that cause a lot.
I'll just add
Yeah,
my 2 cents from the
Oh, go ahead,
borrower.
Richard.
Sorry, Rick. I'll just add 2 cents from the borrower's perspective. Just like Susie said, it's getting harder and harder for borrowers to get into homes right now. It's the #1 wealth creation in the country, and it's getting harder and harder for them to do it. I just read that it's the average borrower, average U.S. consumer is saving only $250 a month, and that's the average. Dude, sorry, excuse me. When you think about $250 in savings per month, right? The amount that you can save in verifications matters. Like the closing costs actually matter to borrowers. And I think it's a myth that any lender would think it doesn't matter to a borrower if they're only saving $250 a month. 20% of borrowers don't think that they can get into a mortgage with less than 5% down payment. They don't recognize that there are FHA options, there are even conventional options and VA options with 0% down that they could actually get into homes. So, this stuff really matters, and saving money for the borrower matters. I'm a big advocate in the US home ownership being the avenue for wealth creation in this country, and we're making it harder for people.
Yep. So I'm going to conclude this part by saying it would seem that, given the huge volume increase we had right in 2020, and then the huge drop off we've experienced of late, this is the kind of thing that scales where human doesn't, right? If it's human, you got to put bodies on it. With this, the computer scales, right? So I think, to me, that's a takeaway as we look to the future. I'm going to skip the poll in the interest of time, the next one. Maybe ask you all, we'll talk about a couple things. We've just got about 5 minutes left. But talking about adoption, what's necessary to get good adoption? What's necessary to get, the true benefits of this? Let me start with Jody, and then I'll go to Susie.
Yeah, for sure. So I think that and from the same room that Richard was polling about putting consumer permission solutions in place this year, I heard about incentivizing the team for whether it's like, hey, you're like the consumer permission solution king or queen for the month, or to create a competition internally for bragging rights for getting consumers to use the technology for verifications. But I think it matters where you ask. And I think from an adoption perspective, and I found this, so I was, as the COO of a former company, we were on a POS that put the asset verification very early on in the process. And they provided me all of the statistics about where consumers dropped off in the process. Well, they were asking for them to go in and verify their bank account information so early in the process that it scared the consumers. So we would see a drop off in that application, and then we're trying to get that consumer re-engaged into the point of sale, and we're having a difficult time doing so. And I said, can we move this piece? Like, make it a task. Let the consumer get in the point of sale, answer all of the questions, get familiar, and then create a task that says, all right, thank you for answering all these questions. Now we need to verify the information in your loan application process. Now I want your bank account information. So I think the strategically placing it is important, and to work with providers that will help you strategically place where you want to ask the consumer to do the verification. So I think it's paramount. I've seen it, and by no means am I saying that I have been so successful in this in implementation that I would say that we were good at it. But I'm also a perfectionist, and I don't understand why you can't get over 50% of consumers that are able to do the verifications. But that strategic placement of where and when you ask the question, and then how you ask it to make it sound like it's coming from you, is extremely important.
Susie, 2 minutes of wisdom.
I think that it's important to pick the right people to start this process, and getting a salesperson, no matter how often leadership says you need to do this, you have to get a peer to really engage in this, or a group of peers to really engage in this, because salespeople will listen to salespeople. If they see the success and they see what they're doing with their consumers, that is the best way to engage, is start with a small team, get the engagement, get the enthusiasm. I love what Jody said about having contests, but start with a smaller group, and then have your advocates out there that are peers training other peers on how to do this.
Excellent. Richard, any concluding thoughts?
Yeah, here's what I would say. Strong leadership really helps change management. And you've got two leaders on the call right now, Susie and Jody, who are strong leaders, operations leaders at very large lenders. And if you feel you need help, reach out to folks like this. Like, you can reach out to Jody and Susie. They'll have a conversation with you. They just want to help. So, I like to plug strong leaders. I like to work with strong leaders like these. And so that's what I advocate. If you have strong leadership in your organization, that's great. If you think you need some assistance, I'm a huge Jody and Susie fan.
Thank you.
Well, Susie, Richard, Jody, thank you so much. I'm gonna come back up. There we go at the end. So there's some contact information. Many of you might know me. So if you need Rick Hill, you can certainly just rhill@mba.org, or get to Danielle, or however you want to get back to us. But I do, Susie, Richard, Jody, thank you so much for sharing your expertise with us today. There is a poll question. We just would like to hear feedback. So I'm going to turn it over to Danielle.
Perfect. And thank you for doing such a wonderful job at moderating, Rick. I mean, this was such a lively discussion. We may have to come back and do a part 2. There were a lot of questions that we weren't able to get to, but I do have the post-poll evaluation questions up for everyone. Just want to thank you for taking time out of your day today to join us for this discussion. Hopefully you found it insightful and you have a couple of things to take back with you. If you could just give us your honest opinion of what you thought of today's offering, we would greatly appreciate it. Again, it helps us to improve our future webinar offerings. So just to echo what Rick said to Susie, Richard, and Jody, thank you so much for being on this panel today, for sharing your experiences with us. I will give the slides at the end of the webinar via email, so their contact information will be in there. If we weren't able to get to your questions, I highly encourage you to reach out to them. They are the experts in this area, and they are more than happy to answer any questions that you might have. So again, thank you all for your time and your attention, and we look forward to serving you again on another MBA education webinar here really soon. So enjoy the rest of your day, everybody.
Thank you all.
Thank you.
Thanks,
Bye-bye.
everybody.